Good morning, everybody. Welcome to the third day of the Social Science Festival that's continuing until Friday afternoon. We have a very interesting presentation this morning, but before I introduce you the speaker, I have a few announcements. The first one, I want to do a land acknowledgement. So we acknowledge that the land on which we live and work is unceded. We are grateful to the Kanien'kehá:ka Nation for their long-standing and ongoing custodianship of John-Jagay, Montreal. I also recognize that many First Nations have historical and contemporary ties to this place, such as the Anishinaabe. We honor and take the traditional custodian of this land, as well as the land itself and all the beings that contribute to our common survival. The second announcement I would like to make is that your student association, the VCSA, has generously contributed to pay for this conference. The person you're going to meet this morning, Mario Fortin, he comes all the way from Sherbrooke, like 2.5 hours from here, to come and speak to you about housing. And your student association was very generous in contributing to the fees to have this speaker. I also wanted to remind you that there is an accreditation vote that will take place for your union between October 27th and October 31st. So this is very important. Now I'm ready to introduce you to the speaker. So Mario Fortin holds a PhD in economics with a specialization in macroeconomics. He recently retired September 1st after a 37 years career as a professor in the Department of Economics at the University of Sherbrooke, which he chaired for 7 years. He has completed several research projects on the Canadian economy, some of which were commissioned by the Canada Mortgage and Housing Corporation. These mandates included the effect of demographic changes on housing prices, the determinants of mortgage demand, and the role of residential property in building retirement wealth. He is continuing his work on Canadian public policy and on the French-Canadian adaptation of macroeconomics textbook. Please give a very warm welcome to Mario Fortin.
Thank you. So first, I would like your understanding that it is the first time I presented in English for the last maybe 5 years. So I'm not, maybe at some times I will need your understanding about it. So the topic today is a hot one. You know, you as a young person, you probably see the news that housing has become very expensive. And there is a lot of problems about the affordability of housing. So I want to give you an insight about 4 different aspects of the question. The first would be to give you some basic facts about home ownership in Canada and in Quebec. How do we do about it? How the ownership rate has changed over time. The second will be maybe the more technical. What happened between 2000 and now? 2000 was a year in which home ownership was much more easier than it is today. What happened to change the situation? And then what policies can be done to improve home ownership? What is doing done, and what are the tools that are available to you to facilitate access to home ownership? I know you are still young about to think about it, so you will need to think about home ownership probably late in your 20s, in the 30s. So you are still very young to think about it, but I hope that you will find it interesting to think about it. And I give you some insight about how to build wealth during your adult life. If you do own a home, or if you don't own a home, what can be done to build financial security? And then a very short part about what is the prospect for the future. I hope that you will find it interesting, and I'm sure that at some times you will find that I'm a bit too technical. Okay, here, over there. Okay, so first thing is that home ownership is something that is considered in Anglo-Saxon society as a kind of personal accomplishment. It plays a social role in symbolizing success, security, wealth accumulation. And since World War II, it has been a dream fulfilled for most of people becoming adults since this time. But recently, as I said, it has become a fading reality. What you have here is two lines. You see the home ownership rate globally in Canada and in the province of Quebec. You see that since 2011, the home ownership rate has started declining. It was improving, and it has been improving for the last 50 years, but in the last 10 years, 15 years, it has started declining. So there are many reasons for that. One of them is the increase in housing price, but there are other reasons that I want to indicate. So what you have here is a shot showing how the ownership rate has changed over time, depending on the age. You have different. The green line is the more recent data for 2021, and 1971 is in the blue area. So you see what we call the age profile home ownership rate. And globally, the age profile is something that you see that around the age of 50, 75% of Canadians own a home. So it is the vast majority of people that become home owners during their life, and it is something that takes time. We are very few people at the young age that are home owner, but it becomes very frequent, and the majority of people become home owner. But we also see that over time, the proportion of people becoming home owner has decreased when they are young. Okay, so the fact of becoming homeowner is something that happened later in life than it happened before. And you also see that for senior people, the ownership rate is higher than it was before. In other words, the age profile has changed over time, and it seems that the young people or younger people, and young here is because I'm now much older, it's before 50, has been declining for people before the age of 50. And there are a couple of reasons for that. Okay, one is that the people get, I would say, settle later in life for many reasons. We study more, longer. Couples are less stable than before. People are reporting the babies. There are babies much later in life. Just to show you the data here, you see the average age at which women and men have their first child, in Quebec. You see that now the norm is beyond the age of 30. So the people settle later in life than they did before. So that's part of the reason why the ownership rate has declined over time. When we look at more specific data about home ownership, we discover that family household, people living together and are related by family bond, have a higher ownership rate than people, what we call non-family household, people living together, like for example with a roommate. Okay, so in this case, there are much less ownership rate. How do Canada fare with other countries? You have here a description of OECD countries' ownership rate. You see that in some countries, Romania, almost all the home ownership rate is close to 100%, 95%, and the lowest is Switzerland, which can surprise you. Switzerland has a very high per capita GDP and a very low ownership rate. Germany, New Zealand have low ownership rate, but that's still a very affluent society though. So we can have, or you can have a society in which the home ownership is low and still be a very affluent society. Canada is in about the middle of the pack with ownership rate close around 67% here. And here this description, you don't have to remember to all this data, okay? So I don't want you to be stressed about it, but you can see that in Quebec, we have the lowest ownership rate in Canada. Do we feel bad about it? We shouldn't. Okay, there are some consequences, but I could also show you that we have the happiness score, and when we did this kind of survey, we asked people, are we happy with your life? And the highest score is in Quebec, in all provinces. Quebec has the highest life expectancy, not only in Canada, but in North America. Okay, so we have a good quality of life in Quebec, despite the fact that we have a lower home ownership than other provinces. And mostly the ownership rate is lower in Quebec because of Montreal, which has a much lower ownership rate than, say, Toronto, Vancouver, or other cities. All right? So it's pushing down the average for the provinces. So the second part, and probably the most difficult, and I hope that you will find it anyway interesting, is what happened since 2000. You see the price of housing has been going up very, very significantly. It started in 2000 at around $200,000, and the average is now close to $800,000. Remember that these data are Canadian average and are pushed up by the situation in Vancouver and Toronto, which have very much higher price than other cities, much higher than in Montreal, much higher than other, let's say, Vancouver, not Vancouver, Calgary, and Moncton, other large cities. And it has grown much faster than income and much faster than other prices. I don't know if you're familiar with the concept. Just when we see data like inflation adjusted, it means that the price of housing has risen more rapidly than other prices. And Canada is the country in which the price of homes has increased the much in OECD. Okay, so you have the average OECD in the green line, Canada, the red line. So we have a very specific situation in Canada in which housing has been increasing much faster than in other countries and much faster than our income. And we can ask why, and the short answer, I'm an economist, so I don't know if you know the term, but teacher parrot to repeat supply and demand, and you have an economist. So I will analyze this as we do, as a phenomena of demand and supply. And demand is just, the way of thinking about demand is that how much we are willing to pay to satisfy our needs. In the case of housing, how much are we willing to pay to buy a home? And the supply is how much we have to pay to have resources available to satisfy this need. So it's just a way of see how much housing is available in respect to the needs we have and the amount of money we have to satisfy this need. And in the short term, the stock is almost fixed. In the case of housing, it takes a very long time to build a significant portion of the stock. Every year, we build about 1.5% of the total stock of housing, which is a very tiny fraction. So in the short term, when there are a change in needs, when the change in the amount of money people are willing to pay for buying a home, we have to do with the existing stock. It is very hard to adjust the stock. And the demand is made by what we call household. Household is a group of persons living together, either family or non-family, okay? And there are 4 reasons for a change in demand, okay? 2 of them are related with what we call macroeconomic situation. The macroeconomic situation is related to how much people earn, so the average income of household. When the income is high and the unemployment is low, people have more money to spend on housing, and the demand for housing increases. The second is interest rate. When the interest rate goes down, people can borrow more easily, they borrow more, and they have more money to spend on housing. The third is the number of households. So the question of demographics is very important to determine the needs, how many people we need housing in Canada. And the fourth is the conditions to obtain loans. I'll give you an example about what happened in the US. When we change the condition to obtain credit, it can have a significant impact on the demand for housing. So how the macroeconomic conditions change? And essentially what you have is see in the gray area is the part we don't want, which we call recession. Recession is a period in which unemployment rises, employment falls, and, well, things are turning bad, okay? And we had, a very long time ago, in 81, 82, 1992, two significant recessions in Canada. We got another one in 2008 related to what we call the financial crisis in the US. And then later on, a more recent one, the short recession associated with the COVID crisis. Now, I want to pinpoint that in the last 2 years, even if we're not officially in recession, the unemployment rate has been increasing. Employment is not increasing as fast as the population, so the employment rate is declining. And we have a situation similar to a recession, and it has been going on for the last 2 years. And what happened with the US recently is going to worsen the situation probably in the short term. So we are in what we call a difficult situation, economic situation that has similarities to a recession. So just keep in mind this for the situation. But you can also see that for a very long time after the recession of 2008, the unemployment rate has been steadily declining and had reached a low in 2019 that we hadn't seen for the last 50 years. So in other words, during this period, the macroeconomic conditions were very favorable. Real income per capita in Canada has been increasing steadily until the middle of the 2010. Since 2015, the real income has stopped growing in Canada. We are still at the same, what we call standard of living than we had 10 years ago. So once again, we are in this situation in which the economy is not growing fast enough to improve the standard of living. So real income is struggling to improve in Canada, certainly not as fast as it did in the past. Yet, when we speak about housing price, we have to keep in mind that we build better house than we did before. The size of the house has increased by 23% the last 30 years. We speak about the difficulty to access housing, but we build larger houses, so they cost more to build, they cost more to buy because they are better done than before. We have more requirement about energy efficiency. You have to put more equipment to begin with. So we build more expensive houses than before. Now the technical part, I hope you won't find me too boring or too difficult about it, is the role of mortgage loans. When you buy a home, typically, particularly for first-time buyer, you don't have the money to buy the home. Okay, you have just a tiny fraction of the amount needed to buy a home. So what we have to do is to go to the bank, not to rob the bank, I precise, it's just to borrow the money to buy a home. And you have to satisfy condition to get a loan. And the conditions that you have to satisfy will determine how much money you will have to buy a home. Okay? And that will be the main determinant of the change in housing demand in the short term. And that is the part technical. Just want to explain very briefly how mortgage works. You borrow the money and you repay the amount with a series of fixed payment over this, what we call the amortization period, which is typically 25 years. So you have to make either monthly payment, weekly payment, but regular payments in which progressively over time you repay the amount that the bank has provided you. The borrowing is limited by two ratios. One is the fraction that you pay by yourself, what we call the down payment. For example, if you have $25,000 available, that will be your down payment. And if the house costs 500,000. You have to borrow 475,000 to make up for the difference. You know, you see the point, okay? So this is called the down payment constraint. There are conditions to satisfy to the amount you need to put by yourself when you buy a home. The second is to look at what the payment related to the borrowing and other expenses related to the home. What fraction of your income that is representing by these payments? Okay, qualifying for a loan requires stable income. You have to prove that you will be able to repay the loan. So you have to satisfy some condition we call a good credit condition. And I don't know if you know that, but there are agencies that give a score to your credit. If you use credit, you have a credit score. And the credit score is a number that indicates if you are a good borrower or a bad borrower or a risky borrower. The higher the score, the less risky you are, and the better the condition you can have when you get a loan. An important part about the mortgage is that if your down payment is less than 20% of the house, it needs to be insured. It's not possible to get a loan that is not insured if your down payment is less than 20%. And the condition at the time are determined by the insurer. The main insurer is the CMHC, Canada Mortgage and Housing Corporation, which puts condition to accept to insure the loan. And these conditions are that the service ratio is not higher than 39% of your gross income. There is also a 5% additional loan to get 44% if you have other loans like car loan, student loan, that could, there are some consideration given to other charges related to other borrowing that you could have, okay? So what does that mean? It means that, I'll give you two examples. Suppose that you have $25,000 and the down payment requirement is 5%. You cannot borrow more than $500. Yeah, I should have said 475. Sorry, there's a small mistake here. And the second is that suppose that the gross income of your household is $80,000. The more you can pay for your loan is $2,600 a month, $32,200 a year. So once again, these are just indicative of the order of magnitude of the dimension, right? Now, if we change some of these ratios, people will have access to a different amount. If, for example, the CMHC decided that, okay, we have to reduce the amount we accept to 35% for the GDS, then the amount you could borrow would be reduced. If the CMHC decided that, well, there is no down payment requirement, then you could borrow more. So you can change the amount available in the housing demand by changing these conditions. And obviously, the other thing that can be changed is the minimum requirement to obtain a loan. Currently, it's 680 for your credit score. If you're below this, normally you will not qualify for a loan. If you are over 680, you will qualify for it. So if you change this, that would increase or decrease housing demand. Now, interest rates have been going down, and the consequence is that for the same amount, you will pay, if you borrow the same amount, you will pay less. Okay? Once again, these are just examples to show you how much the change in interest rate impact the amount you have to pay each month. The example is if for each part of 100,000 loan, this is the amount that you would have to pay monthly if you have to repay the loan over a period of 25 years. And if the interest rate is 7%, it's close to $700, 693. If the interest rate falls to 5%, it goes down to 578. If you are able to amortize the loan for a longer period, let's say for 40 years, the amount falls by from 693 to 605. So once again, the exact amount is not important. What is important is to see that the combination of interest rate and amortization period impacts the amount you pay each month. If you keep in mind that I suppose, once again, an household with an income of $80,000, what is the amount you can borrow? And this is the indication, okay? If the interest rate is 7%, the maximum you can borrow is close to $290,000. If the interest rate goes down, the maximum you can borrow for the same payment would be $346. So just having a decline of 2% in the interest rate increases the amount you can borrow by almost 20%, right? So if you increase the amortization period, the amount you can borrow also increases. Now, what happened in the past? Okay, so this is the graph that shows the interest rate on mortgage in Canada. You have, when you borrow, you can decide to have a fixed rate or variable rate. You can have, what it means is that for a certain period of time, the interest rate will not change on your loan. You can decide to borrow with a fixed rate of 5 years, okay, which is the red curve here. This is the interest rate on the 5 years. The curve, the yellow curve shows the interest rate for 1 year. It is also possible to have a variable rate at which any month the interest rate would change. And the important part is to realize how much of the decline we observed in the past for the interest rate. When I was a student, when I was in your situation, it was in 76, 78, okay? I was not interested in buying a home. I was too young for that, okay? Even in the 80s, when I was a student at the university, the interest rate went up to over 20%. At the time, I was not too worried about my personal situation because it was a student loan I had, and the government was paying interest for me, right? Okay. So, but after I finished my studies, it was another deal. Okay, but the period at which I bought was here just before the recession of 1990. So what I want to realize is that each time before a recession, I don't know if you see it, but I will help you to see it. Before a recession, usually interest rates are rising. And when the recession happens, interest rate falls, right? And it's a pattern that can be explained by what happened to the supply and demand of credit and the monetary policy, right? So the period in which the interest rate decline is usually after a recession. But it happened something after the recession of 2008 here. The interest rate became very, very low, much lower than they had been since the 50s. And it has been a period of sustained low interest rates for, once again, macroeconomic reason I could not explain here, but related in part to what happened to the growth in China, what happened to the fact that a lot of people of my generation were now in their 50s, and in the 50s, typically, people save a lot of money because usually, once again, our kids are no longer at home. We have high income, low expenses, so it's a good time in the life to save a lot. So because of macroeconomic condition, the interest rates became very low. And with very low interest rate, it is possible to borrow much more money for the same payment. So this helped to sustain the demand for housing for this period, and explain in large part because why people in Canada increased their indebtedness so high. There is a small mention here. This is to show you that I'm not very good at timing the market, because that's when I bought my first home, and I took a 1-year loan at 14%, so I could not qualify for more than $70,000 for a loan at the time. So it seemed a very low amount, and it was a very low amount, but my wage was $36,000. I was the only earner of the house, so I couldn't pay more. Fortunately, the house could cost only $82,000. I was able to afford it, but very barely, okay? So there was a major crisis in 2008 in the US because credit was extended in the US to people that were financially not able to repay their loan. We call that the subprime crisis. Subprime means we extend loan to people with a low credit, bad credit condition, low credit score, right? So loans were extended to people, and this led to a lot of construction in the US. Home building went up, particularly between 2003 and 2006, and then in 2007, house price started to collapse, and a lot of loans were not repaid, so there was many major bankruptcies in the US, which led to a fall in the credit available and a very, very strong drop in housing prices in the US. In Canada, we avoid the worst of this. Banks continue to receive the loan because although we made some move to increase the amount available between 2000 and 2006, we extend the amortization period from 25 up to 40 years. We decided to remove the down payment requirements, so we were moving in the same direction than the US, but the condition to obtain loans were still strong in Canada in the sense that we did not extend credit to people that were unable to pay, so the default on mortgage loans remained very low in Canada with respect to the US, and no banks declared bankruptcy in Canada at the time. So the housing market declined a bit during the recession of 2008, but not as much as in the US, and the price continued to climb after that. So that was the first part of the story I want to describe. After the recession, people in Canada continued to borrow more and more because credit became very inexpensive. And with more money available, that means people were able to pay more, and that contributed to increase the price of housing even during the up to 2019. Now there is a recent expansion, acceleration during the pandemic and after that. So the pandemic started here, and you see that the price, this is the market value. This is data that are available. The source are there, so if you want to extract it and see by yourself, okay, this is all official data. The market value of housing increased a lot during pandemic, and the amount that people borrowed also increased faster during this time. Okay? What condition changed also is that the Canadian government changed the immigration target in 2016. For the last, or let's say 20 years before that, the immigration target for permanent immigration was 0.8% per year. So you take the Canadian population, you multiply by 0.8%, and we see this is the official target. The exact amount can vary, but it was something that the federal government was the goal that was pursued. In 2016, it was increased by 1%, from 0.8 to 1%, and then in 2022 to 1.2%, something that the Canadian government wants because it contributes to a growing population in the context of we have a very low fertility rate. I don't know if you know this, but we don't make enough babies to reproduce a generation. So without immigration, the population will be declining in Canada. So I just want to, the same that we observe in Europe, now in Korea, Japan, all countries that have a low fertility, almost all countries have low fertility rate. And also after the pandemic, there was a major change in what we call temporary immigration. Temporary immigration is related to international students and people who got a permission to come here to work, but only on a temporary basis. They can become permanent, but the government opened the doors to more people coming for temporary reasons. And this was as a consequence that this is the real data, okay? Canadian population started increasing at an unprecedented rate. In 2022-23, the growth rate in Canada of population was over 3%, which was one of the fastest in the world. You have, in 2023, there were only 8 countries in the world that had a population growing faster than Canada. All of them were developing countries. The only country which had developed countries which had population increasing so fast was Canada, with in part was because there were some people that, when the border were closed, arrived later, and also the change in temporary immigration. This put pressure on the housing market and contributed to the recent rise. Another factor that increased the demand for housing is what we call aging. Aging is that the proportion of people, senior, old age people, is increasing over time. This chart shows, I try to explain it. If you take 1,000 people on a certain age group, how many households will you have? A household is a group of persons living together. If in this group you have $500, it means that, $500, sorry, 500 households. It means that this age group, in average, there are 2 people sharing the same housing unit, right? And when you have a higher, what we call headship rate, it means that we need more housing units to house the same number of people. And this proportion is much higher for people, for older people, because many old people live alone, right? So because many old people live alone, we need more housing units when the proportion of people over 65 is increasing. You see that? So this contributed, the aging of population contributed to increase the housing needs in Canada, and is still contributing to this. The impact of the pandemic was major. First, the Canadian government made an incredible deficit and distributed a lot of money to the Canadian households, to the point that what we call available income increased very fast during the pandemic, which is something that we normally won't see during a recession. During a recession, normally people see their income declining, but during the recession, the reverse happened. People receive a lot of transfer from the government, and because we were in a lockdown, it was not possible to spend. Remember this? You are still, we were stay-at-home situation. We could not consume, so people were able to save a lot. And when we save a lot, we have more money available to demand to housing. Interest rate became even lower. So people were able to borrow at a variable rate and pay less than before. Working from home increased demand for housing. We need more space to work from home. And as commuting was less necessary, people moved away from large cities, as we see that recently. For example, Montreal is one of the only region in Quebec in which people move away. And the other cities, like I come from Sherbrooke. Sherbrooke has become like a commuting city for Montreal. Okay, it's one of the city in which people can see well. It's a 90-minute drive from Sherbrooke to the bridge. So we can live in Sherbrooke and be in the office 2 times a week in Montreal. So the people were moving away from large cities. Now, I spoke a lot about demand. Let's talk about supply. we, in the short term, we have to live with the stock of housing, but we are building home. And what is the cost of building home and what influences it? So I repeat again, we can build only a tiny fraction of the stock each year, about 1.5% of the stock. It takes time to build houses. And construction is motivated by profit. You need higher price for home builder to decide to build more units. Because if you don't see the profitability, they won't build house, right? So usually what we observe is the following cycle. For some reason, like for example, higher income or lower interest rate, price goes up. As price goes up, the construction accelerates, and we see more housing units built in Canada. And after a certain time, because more units are available, we see prices going down, but it takes, let's say, 5 years to see a significant impact of construction because it takes time to build homes, right? So that's usually what we see, yet recently we discovered that the construction did not respond as fast as before to the increase in price, and we can ask why this is happening. So this chart is just to show you the motivation. New home are here, existing home, the price is here, and we see that over time, the price of established home has increased much faster than the price of new home. This motivates the people to build home builders to build more. Now you have the comparison about how many housing starts there are in Canada, or in other words, how many housing units we built, and the change in population. And usually because in average around 2 people are in the same housing unit, you don't need to build as many houses as the increase in population. But more recently, the number of houses we built did not follow the rapid increase in population that we observe. So there is a growing discrepancies between the needs and the number of units available. This is another graph that shows about the same thing, population growth and housing starts. And to my point of view, I think that's the main reason to be worried about the housing market is what's happening in the productivity in housing, in construction. The productivity is a term we use as economists to describe how many things we produce in a 1 hour of work, which we call productivity of labor. So when the productivity is decreasing, it means that we need to work more hours for the same result. And this is something that I just took from a report for the CMHC. You have the source here. Roughly 650,000 workers are building homes in Canada, which is the more we had. Yet we don't see a similar increase in the number of units. And with the current resources, we should be building 130,000 more homes, rather than having 250,000 homes. We should have closer to 400,000 homes built if we look at what happened to productivity. Just once again, these are of chill data. You can have the source here. This is the productivity in the housing, which is mostly flat on the long term. It means that we are not improving the efficiency at which we are building homes. And more recently, it has even been decreasing. The decrease in productivity in housing is not something that we see only in Canada. We see this in most countries. So this is something that happened and consecutive to the pandemic in part. But the reason why the trend is negative is because the construction sector is becoming more and more regulated for very good reasons. But what we say sometimes is, I don't know if you know the expression, the path to hell is paved with good intention. You know the expression. We multiply the regulation for fixing small problems, and with multiplying the regulation, we are creating a big problem. It costs more and more to build homes, so that it costs more and more to buy home because it's very costly to building homes. This is the price index of building homes, and it's discouraging. I'd like to give you hope, okay? So I hope you won't hate me after the presentation, but since the beginning of the pandemic, and look the impact of the pandemic on the cost. When we see going from 120 to 180, it means that the price of building the same home has increased by 50%. Goes from 120 to 180. It means an increase of 50% in the cost of building a home. And it is a very well, something that we don't like, okay? We would like the price to, the cost to remain flat or decreasing, but we see the reverse. So we could ask why, and the reason for why the productivity is lagging behind. There are, this is the main, I would say, the main reason why we observe this. First, it will be surprising how small home builders are. The vast majority is very small enterprise of 5 employees or less. And when you have 5 employees, it's much harder to innovate. It's much harder to realize what we call economies of scale. You know, why do TV sets have become so cheap? Because we mass produce TV, and we become more efficient and very efficient because we mass produce the same unit, would say 100,000 units, exactly the same in home. It's not possible to do that. It's not possible because each home is specific. Each municipality has its own regulation. You don't have the same regulation in Montreal than you have in other cities. So you cannot have exactly the same model of house, which can fit in Montreal and can fit in Saint-Jean-sur-Richelieu, in Sherbrooke, because each city has its own regulation, zoning, restriction, etc., etc. The sector, and because of that, it's very hard to become a large home builder. So the industry is dominated by small companies, and it's very labor intensive. It's hard to make automation. The sector is increasingly regulated, so that building responds very slowly to demand. The permitting is a very long process. It took, in 2019, about 190 days to get a permit in Montreal. It's now 440 days. It takes 1.5 years to get permission to build a home, which is way too long for building to respond to the price increase. It's not increasing as fast, responding as fast as it did before. So permit obtention in Canada is among the longest in the OECD. The other reason is that construction workers are needed elsewhere in the country. We didn't build enough school, enough road, enough electricity generation. We don't have enough machinery and equipment, et cetera, for the same reason. Regulation in the residential sector is then competing with others. This graph shows a ratio between the amount of equipment we have in Canada and the number of workers. In a good word, these curves should be trending upward. We should see that as time passes, workers have more and more equipment so that they become more efficient. And we see the reverse. Since 15 years in Canada, we, as country, we don't get equipment fast enough to keep up with the population. So we need to increase the quantity of buildings we do, like schools, hospitals, once again, electricity generation, roads, et cetera. We need to do that in parallel to building more homes, right? So we need more of a lot of things. So the construction sector is overextended right now. in the context of building homes, we are competing with other sectors which contribute to increase the costs. I don't know if you're following me. No, I hope so. I hope it gives you the insight. Okay. What time is it? I have 10 minutes left. Okay.
One question after.
Yes, I'll go fast. Okay. There is a last concept I want to introduce. We call that housing affordability. Okay. The concept of affordability is how much does it cost to occupy a home during a certain time in proportion to your income. So when the index is increasing, it means a decreasing affordability, okay, here. Because what this series shows is what is the cost of owning a home in proportion to what we call median income. Median income is the income at which half the population earns more and half the population earns less. And when you see, for example, Toronto, Vancouver, that the curve is at 100%, mean that it takes the average income just to pay the home and you have nothing left to, let's say, make secondary needs like eating, okay? So buying, I shouldn't make a small joke about it, but it just shows you how expensive houses are in Toronto and in Vancouver. The good thing is that in the last 6 semesters, since about 2 years, affordability has started improving after being at the worst they have been. Currently in Montreal, if you look at the curve here, the affordability is about the same as it was here in 1990. So in the province of Quebec, we could say that the affordability is about the same as it was when I bought my first home. So just give you that maybe things are not so bad. In the past, we already had comparable situation in terms of affordability. But in Vancouver and Toronto, they are in a class of their own. Okay, so for some reason into geography, they are the less affordable place in Canada. So the challenge remains huge. Okay, we will need to improve productivity in housing. And the CMHC, the government, the good news is that the government is waking up now. And they realize that you have to change the way we do building homes. For example, in Rimouski, they have been able to cut the price in half for building new units for student residents by adopting uniformization, a standardized unit, and building in usine, factories. Thank you, and bring the units already built and in some becoming more efficient. Okay, so we have to increase productivity by changing the way. The CMHC says we need to increase the size of the home builders so that we can have economies of scale. Municipalities are working to remove as much as they can about the impact of regulation on the time it takes to get permit to build. So the good news is that government have become aware of the situation. Now, what can you do for yourself? Use the maximum, if you want to become homeowner, use the maximum of what is available right now. And there are 3 programs that are available to improve the access to home ownership. The older one is the Home Buyers Plan. Okay, it means that you contribute to an RSP, and then you can withdraw some part of what you contribute to RSP, and you have 15 years to repay or reimburse your RSP. Think about it. You're probably a bit young for this, but when you have higher income, let's say you have marginal tax rate of 40%, each time you contribute $1,000 to a RSP, it reduces your tax by $400, a tax that you will have to pay when you withdraw, maybe 30 years later. But it is called deferred tax. So it is advantageous to use this deduction, and the government give permission to use this to help for the down payment. This is the oldest program available. 2 years ago, there was a second program, and which is the best you can use. It's called the First Home Savings Account, FHSA, in which you can contribute $8,000 a year up to $40,000 in an account and get a tax deduction. And if you use it to buy a first home, you will be able to use all this without having to repay this. It is the equivalent of receiving a subsidy, which would be a value of $16,000. And the third, which is the most recent, is that the government introduced a GST rebate for building a new home. So it's not for existing home, but if you build a new home, you will have a GST rebate on this. Well, I'll pass about it. The last question is, what do you do if you remain a renter? Are you condemned to poverty? And the short answer is no. Being a homeowner has been a good investment in Canada, but invest in bonds and stocks, and stock particularly, has also been a good investment. When you have your money in a home, it's in a sense against all principle of optimal portfolio. The first thing we teach and the first advice that we give to people that want to invest and save is to have a diversification in their portfolio. Diversification in sector, geographic diversification, diversification in the classes of assets you buy. When you buy a home, you do exactly the inverse of that. You put all your money, and even the money you borrowed, you leverage your money to put into a single asset. So better to have a very good insurance, okay? Because if you don't insure your home and you lose it, you're done, okay? So being a homeowner is a risky decision. It has present advantage, but it is a risky situation. Now, why is it interesting? First, the capital gains is not taxable. The second, this is a more complicated concept. I won't explain it here, but imputed rent is not taxed. And the third is that mortgage payment forced you to save over time. You eventually will have to repay your loan, and then you will have built housing equity, which will be useful when you are becoming home. Now, if you're a renter, you can make more money in general, or I will say this, in the last 20 years, it would have been a better financial decision to invest in stocks rather than to invest in home. So if you're a renter and you don't put your money in a home, but you invest the same amount in a diversified portfolio, you would have earned a better return than in a home equity. So if you're a renter, yeah, the best advice I could give you, but I'm not a financial advisor, would be to be disciplined, to save regularly, and to invest in a diversified portfolio so that we could have a comparable or better return than being homeowner. How will things unfold about you, I don't know. It is very hard to make prediction about the future. Okay? In the past, we say that economists are very good in explaining today what they predicted yesterday proved young today. So this is, I know a lot of jokes about economists. Okay, so this is one of them. The 90 years in 1989. There was an influential paper that says when baby boomer will become old, housing price will fall because there will be numerous generation that want to sell their house, and the following generation, the baby bust generation, which is smaller, there would not be enough buyers, so the housing price would collapse. You see where we are Okay, price is much more expensive than they were 30 years ago. It's very hard to make prediction about the future. A lot of things could happen. But if I look at the past, probably the vast majority of you will become homeowner in your life. Probably because you are going to get a post-secondary education. In people with post-secondary education, the home ownership rate is 90%. The age of 50. So the most likely situation that you will overcome the difficulties there is now, and you will be able to become homeowner. Maybe not as fast as the preceding generation, but for some reason it's something that is voluntary. It's not something that now. A lot of things can happen and change. The political situation now has become very challenging, particularly in the US. I don't know what would be the impact for Canadian. Okay, we have ongoing difficulties now that could prove to be long. Okay, so I don't know the future. I hope for the best for you. I think that you will be doing fine, particularly if you're able to keep a stable relationship with a significant other. Being two-wage household help a lot. So, and having to move or having to live through a separation is costly, and we statistically can show that people that go to a separation have a lower ownership rate in the 5 years that follows, okay, because there are consequences to this. So if you're able, try to buy after a recession. That would be the best timing, but the tricky part is that you have to be among the lucky few that won't get into an unemployment pool during the recession. So for those that keep their job during recession, buying after a recession would be the best timing you could have. So I hope that you find this conversation helpful a lot to understand a bit the challenge we have. I'm not promising you what just introduced as the golden pattern, the sunny ways, okay? Sunny ways that Justin Trudeau promised in 2015. I don't know the future, but I remain optimistic about your confidence to overcome the difficulties you may encounter, and I hope you find this a bit helpful. Thank you.
So when you mentioned about interest rate and you said you should buy before, like after a recession, I didn't understand because I thought low interest rates is a good thing.
Excuse me, I have to come closer.
I thought having low interest rates is a good thing because I'm confused about the interest rate question because you said about mortgages.
What happened after recession is that the monetary policy, the Bank of Canada, wants to stimulate spending. And to help stimulate spending, they lower the interest rate. So the best time to get credit is after a recession when the Bank of Canada is trying to help people to borrow. The funny thing is that seeing house becoming expensive before a recession is partly because the Bank of Canada is doing it voluntarily. Well, the principle of monetary policy is that when the economy is overheating, the Bank of Canada try to hold our horses by making credit more costly. And when the credit become more costly, people borrows less, and this helped to cut spending and maintain the inflation lower. After recession, the Bank of Canada is trying exactly to reverse. Say, oh, the economy needs to recover faster, so I will put some fire in the burner, and the way they do it is they flood the market with money, and this helps to lower the interest rate. I don't know if I explain clearly or not, or if it answers your question.
So basically, the interest rate are actually lower during a recession.
Is lower.
A lower percentage. So maybe it was 6%, after a recession, it might go down to a 4%, as an example, a concrete example.
Wait, so is having a high interest rate good or low?
You want lower ideally, but it's a mixture. Like you were saying, there's also, the housing prices, but an interest rate you're borrowing at less. All of you, most of you, 90% of you, I don't know how many, but most of you are going to borrow from the bank to be able to buy your first house. So you want to pay 4% on that debt, on that, let's say you borrow $300,000, you want to pay 4% rather than 10%. Because the higher the interest rate is, the more money you must prove that you have to have a higher income. And that's what he was presenting in the first half is, the higher, correct me if I'm wrong, the higher the interest rate, the more money you have to make to be able to prove you can pay for the house.
Oh, okay.
Yeah.
Thank you.
In fact, what happens during a recession is that because unemployment is rising, price of housing is going down. People have less money, so housing price goes down. But also the interest rate is falling, so you're winning on the two part. If you want to buy, houses become less expensive and credit is less expensive. So this is the best time if you can make market timing. I had two young babies in '89. I couldn't meet the market timing. I had a new job. I needed a home, so I bought, even if I had my babies at the bad time.
Before we take another question, I think another key thing you were trying to communicate is saving is very important. Trying to build that capital, so you have that minimum amount to put as a down payment.
Yeah.
Saving is, and even if you're like, oh, but I'm 17, I started saving at 15 in the programs from the government, so I would have the deposit at 27 to put on the house, that down payment. So saving is super important. You don't realize people need to save more to have that down payment later on. Yes.
Now the challenge is that the worst period, the most difficult period to save is in your 20s. There are so many spending to do. There are so many things, and they are not at your top of your wage. The top would be when you would be around 50. So it's very difficult, but at the same time, it's very important. If you are at 30 with no down payment, no savings, reaching the requirement for the down payment would be very hard. So even if it is challenging, and being young is challenging. Being young is difficult. I've been young before, I know it, but I had a lot of energy. So I was able to do a lot of things that I look back and I say, wow, how could I do all these things? Get a new job, performing in my job. Being a university professor is, for the first 5 years we have to, and I had kids, etc. So I won't make you cry about my situation. I know you won't cry and don't need to be crying. But it is hard to be young, and at the same time, it's a very important part of your life. You prepare your future, and if you can do it by being disciplined, I encourage you to do the most you can so you won't have a bright future, right?
Okay, he's going to stay behind. If you want to ask him personal question, don't hesitate to come down to ask him. And everybody else, I'm going to wish you a nice rest of the day.
Thank you.
Thank you again. Thank you so much.